Hello and welcome to Partners in Project Green's Next in Corporate Citizenship webinar. We're very excited to have you here today. This is the first installment of the Next in series, where we are going to bring emerging trends in technologies and processes to the PPG community. We have a very exciting lineup for you today, a great conversation around CSR and the evolving trend into ESG, or environment, social, and governance. So we're just going to give folks one moment to join today. Stay tuned for just a minute and we'll get started. Just want to remind everyone that your microphones are muted, but you're certainly welcome to put comments in the chat and in the Q&A. In fact, we very much encourage you to do so. There will be time to speak to each of our panelists at the end, so please do use that Q&A function. The recording will be made available shortly after today's event, along with the slide presentations and any other additional resources that come up through the call. So stay tuned for all those details shortly following the webinar. All right, well, I think we'll get started and let folks trickle in as they will. First, I'd like to introduce myself. I'm Jennifer Taves. I'm the Senior Manager here at Partners in Project Green. And again, we are very pleased to have you here for the first in our Next In series, Next in Corporate Citizenship. So first, I would very much like to acknowledge that while we are meeting on a virtual platform, I want to acknowledge the importance of the lands which we call home. So you can see the TRCA land acknowledgement up there on the slide, and we respectfully acknowledge that we are situated on the traditional territories and treaty lands, in particular those of the Mississaugas of the Credit First Nation, as well as the Anishinaabe of the Williams Treaty First Nation, the Huron-Wendat, the Haudenosaunee, and the Métis Nation. So land acknowledgement is a reflection on our relationship with the land and with the First Nations communities that live on that land. TRCAs are stewards of land and water resources within the Greater Toronto Region, and we do take that responsibility very seriously. And so we are aware that we are uniquely placed to restore and enhance this relationship. Yes, we have learned that these acknowledgements are meaningful when we speak to our own personal relationship to the land that we grew up on and the land that we live on, and that we acknowledge what our intentions are in the work that we are doing on this land. So I live and work in the same traditional lands as the TRCA as an uninvited settler, and I grew up in Alberta on the traditional lands of the Métis, Niitsitapi, Stoney Nakoda, and Tsuut'ina land. Growing up in view of the Great Canadian Rockies, I was very privileged to have my love of nature be sparked at a very early age, and I count myself as very fortunate to be able to work in that space. And I am committed to growing my understanding of Indigenous ways of knowing and being on this land since time immemorial, and to integrating those learnings into PPG's work. So I and the rest of the team encourage you to use the resources that are up there on the screen now to learn more about the lands that you live, work, and play on, and to reflect on your relationship with those lands. We'll just take you through a brief agenda of today. I'll go through a few new updates coming from Partners in Project Green, and then we'll dive right into the presentation with our speakers. And so I will go through my slides quickly so as not to take too much time from that important conversation. Just to do a few updates from Partners in Project Green and TRCA. First off, we have some very exciting news. Partners in Project Green is evolving and changing right now. We have a few very exciting updates coming your way. You can stay tuned to our social media channels on LinkedIn and Twitter on April 4th, where we will officially reveal our brand new logo that will take us into our new stage of development. And then shortly following that, in the spring, we have a brand new website that will be launched. There will still be a ton of publicly accessible resources to help everyone along their sustainability journeys, as well as exclusive member-only content designed to get you where you want to be. So please be sure to sign up for the newsletter if you're not on there already, just so you can stay tuned about all those exciting changes that are coming down. And we can't wait for you to see the new website. It's looking fantastic so far, and we're very excited to reveal it. But of course, underpinning all of this is really our work and our commitment to enhancing member value for all of the Partners in Project Green community. And I'm going to talk a little bit more about that in just a moment. But members, please do keep an eye on your inboxes, as this week there will be specific emails going out to you to let you know about all of the important details coming your way shortly. But just to talk a little bit about the revised member benefits, if you go to the next slide, you can see that there are just a ton of benefits that are built into PPG membership, and most of these you are very well aware of: the resources and tools, the access to experts, and relevant and current sustainability knowledge, as well as technical expertise for the organization. But what we've added, in addition to a number of different programming and different engagement opportunities for businesses, are a lot of different employee perks as well. So for example, you've got the Courtright Conservation Area. They've got their Maple Syrup Festival on right now. We've got discounts for every employee at member organizations to attend events like that, as well as TRC's nature camps for kids. Those have discounts as well. So there's just a really fleshed out, well-rounded suite of benefits available to organizations as they move along their sustainability journey, but also for each and every employee at those individual organizations. So we're excited about that. All right, so I just want to invite everyone to our special Earth Day event. We are very excited to have TELUS come out to talk to us about being powered by purpose and investing in our planet's future. They will be sharing their Pollinator for Good investment fund that they have instituted for for-profit businesses to get access to some capital to increase their sustainability through different projects. So we're very excited to have that event. You can register for it now. It's up at partnersinprojectgreen.com/events. So you can secure your spot today, and we'll see you on April 22nd on Earth Day. Next off, we have a very exciting program that we're launching in partnership with the town of Caledon. Businesses from anywhere will be able to access both the workshops as well as the business hub with all the tools and checklists and everything coming along with that. You can register today for the first workshop. It's on May 31st. Again, that's at partnersinprojectgreen.com/events. And these will be really tactical workshops, really walking businesses step by step through how to implement water, waste, energy, and engagement tools and solutions at their organization to improve their ESG, but also their performance, their bottom line, getting those bottom line savings while starting to identify some of those top line business opportunities as well. So you can check that out on the website, and we hope to see you there. I'd also like to flag that PPG's annual employee engagement program is returning this summer. So the People Power Challenge is a great way for organizations of all types and sizes to drive sustainability into their workplaces and with their employees, whether they're working from the office or at home. And I know that a lot of people are if they haven't already, are starting to move back into the office. And this is a great way to bring everyone together and have everyone working towards improving your environmental performance and their own personal environmental performance as well. So this year's themes are climate action and social impact. There will be sustainability actions and scorecards tied to those two themes, as well as events, webinars, prizes, and more to help get your employees involved in the sustainability programs at your organization. So to learn more, you can contact Victoria Kring. Her email is up there on the screen, or simply reply to one of the emails that has been sent to you about this program, and we'll get in touch. Next, I'd like to remind you of all of the water efficiency programs that are available for businesses through your municipalities. The water efficiency practices help lower operating costs, save money, and demonstrate commitment to the environment. And Partners in Project Green works with our partner municipalities to promote these water efficiency incentives for businesses. So you can go to York Region. You can just simply Google York Region Water Business or Business Water, and it will take you to their page with all of their ICI rebate programs and tools that you can use, both for facility, farms, and multi-unit residences in York Region. Toronto Water also offers a number of rebate programs and services, and you can check them out at Toronto Water Rebate. It's a simple way to Google and find out more. And Region of Peel is also currently reviewing their ICI program offerings, and those will come out soon. You can check those out at WaterSmart Peel, or you can simply go to www.partnersinprojectgreen.com/water, where we have collected all of the information for you. So please do that. It is a often overlooked area where people can save money and drive sustainability forward, so please check those out. And finally, I just would like to remind everyone on the call of our Energy Leaders Consortium. It's a fantastic program that has been running for about 10 or 12 years now that really helps organizations drive energy efficiency deep into their organization. So we bring everyone together to share best practices, learn about new technical solutions and technologies that are available on the market, and identify opportunities for continuous improvement to drive sustainability and eco-efficiency deep into their organizations. You can see up on the slide some of the results over the last few years. So since 2013, over $30 million annually in utility costs have been saved by our participating organizations. And this is something that you can take advantage of as well. So please feel free to contact Matt Brunette. Again, his contact is up there on the screen. All right, I think that is enough from me. So I'm very excited to introduce our esteemed panel. We have three wonderful speakers for you today: Daniel Pass, Aparna Venkatachalam, and Teresa Schoonings. I'm sorry for for the name butchering there. I was trying, but I'm just going to introduce everybody now, and then we'll jump right into the presentations. So Dan Pass is a senior consultant with nearly a decade of experience advising leading organizations to embed good environmental, social, and governance practices in business strategies and organizational systems. At Quinn and Partners, Dan leads advisory services for companies and investors to drive operational efficiencies and improve their sustainability performance. His experience includes strategy development, materiality assessments, performance measurement, reporting, climate risk management, and resilience and reporting. Aparna is the manager of ESG reporting at TD Bank, and Aparna leads the development and production of the ESG reporting suite, data and metrics, materiality assessments, and completion of ESG surveys and questionnaires. Prior to joining TD, Aparna worked in the Works Design Communications Company as a sustainability consultant, supporting leading clients across North America on sustainability strategies and reporting frameworks. Teresa Schoonings is a Senior Director, Sustainability at Bimbo Canada. In her current role, she leads the implementation of Bimbo Canada's 2030 sustainability strategy. Since joining the business in 2010, Teresa has held numerous leadership roles, including in communications, government relations, and franchise management. And so thank you again to all of our panelists for joining us today. We're going to start with Dan's presentation, and I invite you all again to submit any questions you have via the Q&A tab so we can get to them at the Q&A session. I'll pass it over to you, Dan.
Thanks a lot, Jennifer, and appreciate you inviting me for the opportunity to speak with everyone. You can go on to the next one. Before I'll start, I'll give just a very quick high-level overview of my company, Quinn & Partners. So as Jen mentioned, I'm a senior consultant with the firm, been with the Quinn & Partners for about 6 years now. And we are sustainability strategy and an integration advisory firm based in Toronto. We essentially work with organizations to design and execute sustainability strategies in order to help strengthen our clients' position with their customers, investors, employees, and other stakeholders. We really help companies to identify business opportunities, manage risks, find efficiencies, and ultimately create more resilient business for the future. You can go on to the next one. What I am going to cover today is really to help answer three questions. One, what is ESG? Two, why is it important? And then three, what is ESG reporting and really how is it changing? Next. So to answer the first question, I'm actually going to take a step back. Often when we talk about ESG, we hear terms like sustainability, CSR. What do these all mean? Next. And so each of those terms, ESG, CSR, sustainability, ultimately they mean the same thing and can really be used interchangeably. So in the end, they all aim to do two things. One is create value, and then the second is to manage risk. And by companies, by effectively managing these things, they are effectively managing more factors that may impact their business. So, not just financial. And it's about actually having a plan to manage the risks and take advantage of opportunities that may present themselves, again, across these different factors. ESG management is a term that's often used by the investment community, and it stands for the management of environmental, social, and governance factors. Sustainability is about managing environmental and stakeholder risk and opportunities. And then CSR, which is a little bit older, stands for corporate social responsibility. And this is more typically focused around responsible and ethical business practices. So kind of more that social side. In the past, CSR has really focused more on reputation management. And as we've seen, it's really about taking a fulsome approach, really looking at aspects across that environmental, social, and governance, which is one of the reasons why that term is kind of picking up steam. So when we say ESG, what does it mean? So what is ESG? Let's go on to the next one. So ESG management, as mentioned, is really about managing aspects across the three performance areas: environmental, social, and governance. Almost every single, sustainability standard or framework out there, whether it be PRI, GRI, SASB, every acronym that you've heard, will touch on these three different aspects. So what's included and what are they trying to achieve? So environment is really about minimizing your impact on the environment. So that's, reducing energy and water consumption, reducing your waste and increasing the amount that you're actually recycling. It's about measuring and reducing your greenhouse gas emissions. Social is really about people. So it's your employees, your suppliers, your customers. It's about engaging with the community. And even now more, especially, with what's been going on in the past few years, it's about health and wellness. And it's about companies starting to embrace and encourage diversity and inclusion. And then finally, governance is really about being responsible. It's about being transparent and being accountable for your actions and your performance. And it's about reporting. It's about reporting both the good as well as the bad, and kind of the improvements and the kind of improvements that you're looking to do looking forward. Today, what we're seeing is shifts in these topics and shifts in priorities. So we're seeing things evolve as companies start to address ESG more, and as the need for action actually is increasing. So, we're seeing energy efficiency and greenhouse gas emission transition into things like clean energy and net zero. We're seeing employee engagement shifting to focus more on human capital. So there's movements even within these three categories, again, as priorities start to shift and become a little bit more sophisticated. And so that kind of leads to the question, what does ESG management actually look like? You can go on next. So as companies have really been managing ESG for a while. ESG really isn't new. However, the importance of it has really increased in the last few years. And so what we're seeing is companies really just starting out, and then we're seeing companies that have been doing this for a really long time. And so there's a bit of a spectrum in where companies are at within their journey. However, there is a common path that companies will take in order to help integrate ESG into how they do business. And it really starts in, at the most basic, you kind of do ad hoc sustainability initiatives or programs. That then moves to a more structured approach where you're actually determining, when it comes to ESG and that big list of topics, what matters most for your company, and then developing a more formalized strategy around addressing those topics. The next step is, once you have those topics, actually starting to track and measure your performance, starting to report outwards how you're actually improving or how you're progressing. Maybe you're setting targets, and you're actually reporting out to some of these global standards, which we'll get to in a little bit. And then the last is really about taking ESG and embedding it into how you do business in order to get value out of it. And companies that have been doing this for a long time and that are really good at are actually using their influence to help change the industry themselves. And so there's a bit of a spectrum, but what we do see is there is kind of common pathway for properties, or sorry, not properties, for companies to actually start addressing and embedding ESG into their business. And so, as I mentioned, we've seen a big increase in really the importance around ESG, but why? Why are companies spending the time and spending money to address ESG? And that really leads into the next question, which is, why is ESG important? We can go on to the next one. Go ahead next. So there really are several benefits for ESG management, and companies are starting to leverage ESG and the integration of ESG into their business to really, again, create value, manage risk, and really create a future-proof company for the long term. ESG management, if done well, can really help provide a number of both direct and indirect benefits. So direct benefits, pretty straightforward, revenue growth and cost savings. So those really truly affect the bottom line. And if done well, you can save money, you can actually generate new income as well. But there's also a number of almost soft or indirect benefits that ESG can provide. One is it can help attract and retain talent. People, especially now with millennials and Gen Zs making up a big portion of the population, they want to work for a company that does well. So they want to work for companies that address ESG and address sustainability, so it can actually help attract good talent. It can also help improve your reputation, or it can actually protect your reputation. Think about the digital age we're in now. Facebook, Twitter, information can flow quite quickly. So, if there's a big environmental issue, if there's some social issue that happens, that can be spread quite quickly. So it kind of can help protect your reputation if you're doing ESG and you're addressing sustainability quite well. It also helps differentiate yourselves and differentiate yourselves from your peers. One of the reasons for that is that, it's been shown to increase productivity. It also helps generate innovation and new ideas. As mentioned, it helps manage risk. And then I'll get to this a little bit later, but more and more governments are starting to put regulations in place around sustainability and ESG. If you're already doing these things, you're already reporting, you're going to be getting well ahead of that. So it'll help just ensure that you're complying with some of the new regulations that are coming into play. And finally, as mentioned, it will just help future ready your business and build a more resilient company as a whole. And these benefits, they're real. They're not just hypothetical. We are seeing ESG management being tied to good performance. And go ahead next. And so there have been several studies that have shown that good sustainability management is linked to strong financial performance. Companies with strong ESG performance and ratings, they've been shown to outperform traditional companies for traditional index investments. And that's really because ESG is seen as a good proxy or a proxy for good financial business. And so what we're seeing is big investors, big pension plans, things like that, starting to take notice. And we're seeing large investments starting to flow into sustainability and responsible investing. You can go next. And so what we're seeing is a growing trend among investors that are incorporating ESG into their decision making. And we can see this through the increases, as mentioned, as in responsible investing. So PRI, which stands for the Principles for Responsible Investing or Investment, is a network of investors and asset managers dedicated to incorporating sustainability or ESG into their investment analysis and decision making. As of last year, there were over 4,000 members or signatories to PRI. That represents 121 trillion in assets under management. That just kind of demonstrates the vast or the size of responsible investing in Canada. 62% of Canada's investment industry is made up of responsible investment. This means that investors and asset managers, they're starting to incorporate more information into their decision making. So they want to see more information around ESG for the businesses that they're investing in, which is driving a lot of this change. They want to see action. They want to see companies. They want to invest in companies again that are doing good. So it's really driving the industry forward when it comes to ESG integration. Now, to help facilitate the flow of this information into the investors' hands, how are companies doing this? And that's really through reporting. And we can go to the next slide, which is going to be the last question, which is, what is ESG reporting? So go ahead next. Really over the last few years, there's really been a steady increase in the number of companies that are reporting on ESG. 80% of global companies are reporting on ESG now. Of the 250 biggest, 96 report. So there's a clear indication that companies are wanting to get this information out there, again, not only for the brand and the reputation, but also to help communicate to potential investors or other stakeholders on the good ESG management that they have and really on their performance. So what types of information are companies reporting outwards? You can go next. There's really a spectrum of ESG reporting that does exist. It ranges from policies to reports to websites. So policies, this, when a company has a sustainability or an ESG policy, often this includes, overarching commitments that that company is making or objectives that they're trying to achieve when it comes to ESG. And will also often highlight, high-level approaches for how that company actually integrates ESG into their business. Reports, they often focus on actions and metrics. So they're typically annual reports. They'll highlight, performance from the past year or key milestones from the past year when it comes to sustainability. This is often where you'll report out, some of those key metrics. So energy consumption, or maybe it's greenhouse gas emissions, progress to any targets that you might have set. And we'll also include things looking forward. What are you trying to achieve in future years? And then ESG websites, this is almost a catch-all. It's kind of a quick and dirty review of all the sustainability aspects that a company might be addressing. It will also be the platform to really house those reports and those policies as well. With 80% of companies reporting on ESG, how do they know what information to report out, and how do they ensure that the information that they're providing out is useful to their different stakeholders? And this is really the purpose of some of those ESG standards and frameworks that exist in the world. You can go ahead on the next one. And so because of this big increase in reporting, organizations have actually emerged to help facilitate the flow of ESG information to make sure that it is usable. So there's several, of these standards out there, and the logos that you see up on the screen are really just a tip of the iceberg, but they really all act to achieve a similar thing. They help to provide companies with guidance on what information they should be reporting outwards and how they should be calculating certain metrics and how they should be disclosing that to their various stakeholders. Each of these standards, there's a broad range in what they focus on. So, there's some that are sector specific. So PRI and SASB are two examples. So those will be specific to certain sectors, and they'll vary if you're, forestry or if you're real estate. There's also focus on actual action of the company. So there's things like the Sustainable Development Goals. Those focus on, company action. And then there's also standards around just general company ESG reporting, things like GRI. There's been a huge emergence of a number of these standards, but there's also been an increase on ones that are topic specific, and in particular around climate. And so as the importance of climate action rises, so will the need for transparency around what companies are doing in order to, or what they're doing to manage their climate risks and how they're combating climate change themselves. And so we're starting to see a number of disclosures and frameworks focused around climate. And this is something that also has been a big focus for governments. And we're starting to see regulations and or the movement from voluntary reporting to mandatory reporting. And you go ahead next. And so with the focus on climate, and what we're seeing is governments and committing to things like net zero, and they're setting targets in order to combat climate change. We've started to see certain governments and municipalities they're starting to regulate that companies actually report on climate. And the standard that they're using is TCFD. So TCFD stands for the Task Force on Climate-Related Financial Disclosures. This is a framework that essentially aims to encourage companies to report forward-looking climate information, so how they're managing climate, along with their financial filings. These are regulations, that are not 5 years down the road. They're actually happening now. So just last week, for example, the US SEC put forward a regulation that will require public companies to report in alignment with this TCFD standard. The Canadian Securities Administrators also did something similar last year, and this is something that's already in place in the UK. So there's more and more, there's a shift in really wanting to use ESG to make decisions, ensuring that companies are providing that to their stakeholders, and governments are starting to require that. So there's a big movement towards ESG reporting, and I would expect those percentages that I showed up on the earlier to continue to rise in the future years. So hopefully that gives you a little bit of a flavor on what ESG is, why it's important, and what ESG reporting is. And I think the two other speakers will be speaking a little bit more in detail on what that might look like for their organizations. So I'll pass it to Aparna now, who I think is going next.
Hi, everybody. I'm Aparna. I'm a ESG reporting manager at TD, and wanted to first start off by saying thank you to Partners in Project Green for inviting me to this presentation, and also to Daniel. I think you did a fantastic job presenting, the background of ESG and also touching on ESG reporting regulations and frameworks. I think that's a great start, and I am going to pick up from where you left off, talk a little bit about the evolution of, CSR to ESG, why are people doing ESG reporting, and why it's become the dominant approach, and also a little bit about how TD does its ESG reporting. So next slide. All right, so really CSR, I'm sure most of you know, again, as Daniel mentioned, it's become a little bit of an outdated concept now, but CSR, which stands for Corporate Social Responsibility, has really been on the business radar for years, and actually refers to some of the softer and qualitative issues, ensuring that business actions have a positive impact on the environment, consumers, employees, communities, and in the general public sphere. It helped businesses really kind of communicate their story about what they were doing well, and also it was their touch point with the communities. Having said that, there wasn't necessarily a lot of data to back up corporate claims, or like even mention the areas that they failed in. It was a way for them to say, these are the things that we did well. But as time went by, environmental, social, and governance issues really came into greater focus, while measurement technologies and reporting also started to become more advanced, making it possible and in fact more desirable for companies to quantify their sustainability and societal impact using metrics that really matter to investors. And the practice of ESG ESG really kind of has its beginnings in about the 1960s as ethical and socially responsible investing with investors excluding stocks or even entire industries from their portfolios based on the business activities they're doing, such as tobacco production or back then involvement in the South African apartheid regime. And today, ethical considerations and alignment with ESG values still remain common motivation for many ESG investors, but the field really has expanded to consider financial materiality as well, and many investors are now starting to incorporate ESG factors into their investment process alongside their traditional financial analysis. And I think this is really what gave way to the shift from CSR to ESG as a way for companies to show clear commitments and accountabilities for addressing critical issues. ESG is measurable, it's quantifiable, it's criteria-led, there's a lot of frameworks, and it allows businesses to fully integrate better environmental, social, and governance strategies into their DNA. Now, I'm new to TD. I actually joined the TD family just last summer. But as I was preparing my slide deck and going through the previous years as CSR and ESG reports, I realized how it was so obvious how this shift from CSR to ESG happened. So as a background, as part of our regulatory requirement, all the largest banks in Canada are required to publish their public accountability statements outlining their community support and access to banking, our investment in the Canadian society, the economy, and the environment. So in the first image that you see, it is our first accountability report published in 2002. But banks and their employees also contribute time and resources to a variety of initiatives such as health and education and arts and culture, youth programs. So in order to showcase how we are contributing to communities across Canada, we started producing a CSR report in line with our global and Canadian peers. So you can see that in the next image there in 2003. And with time, of course, as this global shift from CSR to ESG started taking place, TD also produced its first ESG report back in 2018. And here we again included measurable, quantifiable, criteria-led data and information showing how we fully integrated ESG strategies into our DNA. The report was focused on our investors, stakeholders who want to evaluate our corporate behavior and determine the future of our financial performance and whether they want to do business with us, invest with us. All those things are really what kind of is included in our report, that material information. And at the same time, for us to ensure that we are meeting our regulatory requirements and the needs of our wider stakeholder groups, such as our communities, our customers, employees, we, of course, continue to produce our public accountability statement as a regulatory document, but also started publishing more supplementary reports, such as the TD Ready Commitment Report, which really highlights the impacts of our citizenship work. And today we continue to do that. Our reporting suite includes the ESG report, the Ready Commitment Report, the Public Accountability Statement, and a couple of other reports, such as the Climate Report, to really show the robust nature of ESG and engagements that we undertake as a business. So next slide. And so why is ESG so hot right now? I think, click next. Yeah, okay, great. I think it really kind of started with, Larry Fink's letter to the CEOs. I'm sure most of you here have heard of it. So BlackRock investment firm made ESG really the hottest ticket on Wall Street, when Larry Fink sent his annual letter to the CEOs in 2018. He said that the companies need to show that they make a positive contribution to society and benefit all stakeholders, including shareholders and employees and customers and communities in which they operate. That really kind of drove ESG reporting and disclosures at that time. And also, I mean, there were a couple of rising concerns globally, such as, global temperature increases from climate change, the need to align portfolios with net zero economy, social issues such as racial injustice, health and economic crises of COVID-19. All of these really kind of pushed ESG into a greater prominence over the past few years. Another example was last year, the landmark ruling against Royal Dutch Shell by a Dutch court, ordering Shell to cut their emissions by 45% by 2030, stating that their current targets were not enough. So, I mean, these kind of rulings really kind of set the stage and came at a time when, you know, corporations were already kind of under immense pressure to start setting short, medium, and long-term emissions targets that were consistent with the Paris Agreement. The Climate Accord, which is the Paris Agreement, is really widely agreed upon as you know, the event where it was recognized how critical climate change is, and that we need to avoid an irreversible climate crisis. Another point to that was the release of the IPCC report last year, or was it earlier this year, which flagged climate change as a code red for humanity, and states again that there's irrefutable evidence that human systems are the core driver of climate change. So I think a bunch of factors really kind of led to the push and the rise of ESG and ESG related disclosures and investments. Next slide. So ESG investing really used to be a specialized and niche group, but it is now becoming mainstream, or it's become mainstream. The U.S. Sustainable and Impact Investing Trends, you know, they publish a report every 2 years since 1995, showing the market size of investments using ESG considerations. In this graph here, you can see how in the United States in 2020, you know, the investments under ESG considerations are like about 17 trillion, or 1/3 of all investments under professional management. And this is about like a 45% increase since 2018. This shows that there's a continuation of significant growth in like institutional investors, money managers that are considering ESG factors to identify responsible and well-managed companies that will be resilient over the long term, they're seeking opportunities to support companies and products that advance environmental and social issues, including investing in community banks and credit unions and smaller organizations. Sorry, next slide. So, you know, again, growing stakeholder interest in ESG really reflects the view that environmental, social, and governance issues, including the risks and opportunities that they present, affect business performance, and they're important considerations in decision-making for investors. As an issuer, on an average, companies with higher ESG scores experience lower cost of debt and equity capital. And that means lesser risk. And as an investor, when you look at ESG performance, you know, it can really be an indicator of you know, risk factor within your investment decision. So, for example, when you know, the Volkswagen emissions scandal happened, apparently MSCI, which is a ratings agency, noted that there's a deterioration in the corporate governance at Volkswagen, which actually resulted in the removal from the ESG indices at the MSCI. And then we all know what kind of unfolded after that. So, you know, ESG ratings and ratings agencies are also really starting to take a look at this. It's becoming a really big market. There is a business case for ESG for both companies and for investors, and I think that's really leading to, you know, the business case for ESG. Next slide, please. Yeah, so with this progress, I think the demand for ESG disclosure ratings, funds, and investment has led to an increasing awareness that ESG methods and disclosure need to be robust. They need to be consistent, relevant, and comprehensive, and most importantly, comparable to provide stakeholders a clear view of the issues that are likely to impact an organization. With various frameworks, you know, as Daniel kind of pointed out, they've evolved so much in the past few years to assess the use and consistency of ESG information, the materiality across industries. So frameworks like SASB that are industry specific, and you know, really talk about how information should be prioritized and presented and scored. And again, coming back to Uncle Larry, he really communicated again that companies need to report in alignment with the recommendation of TCFD and SASB to bring that rigor to climate issues to financial disclosures. So it's really, I think, the graph is just kind of going up. And of course, underpinning all of this is the rise of regulation in the ESG space. Daniel also again touched on some of the regulations that are coming up, but the most recent one is coming from the SEC last week, stating that U.S. companies will need to start disclosing their climate risks under the new SEC rules. So it's here, and it's here to stay. It's that shift has happened. Investors are looking for that rigor in your disclosure, and this information is, it has its benefits for your for a variety of stakeholders, right? You're meeting the needs of your investors. You're also meeting the needs of your employees who want to know. And like, there's the biggest generations that are now part of the workforce is Gen Z and Gen X, and we are asking our employers, or we want to work for employers who have good values and they have good ESG and sustainability policies. So next slide. Here at TD, I mean, well, we recognize that ESG is complex. The issues are multifaceted. The world is fast evolving, and we're at the bank our size. We're challenged by multiple stakeholders, often with differing views across regions and sectors and political lines. And judgment is required to balance ESG positions with our fiduciary duty, our business strategy, and considerations of broader economic and societal impacts. At TD, we recognize that we are a citizen of the communities that we operate in, and we are impacted by the same environmental, social, economic issues that are faced by our community. I think COVID-19 really was, something that everybody can relate to and understand. Like, we were all in it together, businesses, people, society as a whole. And we recognize that, we contribute to these challenges in both positive and negative ways. And our goal is really to have an overall net positive contribution to the environmental and social issues that are material for TD. And, cognizant that as a business, we cannot do everything. These are not problems that we can all solve alone, but we are a critical player in contributing to the solution. And with, like, our TD Ready commitment really has a big focus on financial security, vibrant planet, connected communities, and better health. And we're taking action by supporting opportunities that can help people feel more confident about our future. Additionally, our performance addressing ESG topics, again, is measured by a growing number of internal and external stakeholders on a wide range of ESG issues. Sorry, next slide.
Aparna, this is such great information. I'm just noting the time, and we want to make sure that we have time to get to Teresa as well. So my apologies. I'm just going to jump in and ask if we can speed things up.
Absolutely. Just very quickly, this is ESG at TD. You'll get the slides later, so I'll ask you all to just take a look at what ESG entails. Next slide, Teresa. And our annual reporting suite is really part of our board level commitment. We have a bunch of reports. Our annual report, which is our financial highlights. ESG report is a primary disclosure document showing our progress on the bank's ESG efforts. We have supplementary publications, as I highlighted, shows the climate action report is our progress on the climate action plan and our TCFD disclosures. And then we have the Ready commitment report, which is our citizenship platform, and additional methodology papers on our Scope 3 financed emission. I think this really kind of shows that ESG reporting is rising, and we cater to a bunch of, like, a variety of stakeholders. So just I think we'll take questions later, but thank you all for your time today.
Hi everyone. So I'm switching gears a bit to talk about how do you take all of these great concepts and actually implement them into your own organization. I'm going to fly through this because we're actually already supposed to be doing Q&A, and I do want to leave some time for people. I know that you'll get the slides after, so if you have questions for some of the context on the slides, please reach out to me directly. I'll be happy to answer them. Can we move to the next slide? Really fast, who we are is Beanbo Canada. Most people won't be familiar with the name Beanbo Canada, but I'm sure you've tried at least one of our brands on this slide. We are part of Grupo Beanbo, which is the largest baking company in the world, and we're in 32 different countries. So when we talk about shifting from CSR to ESG, and as Daniel mentioned, that whole little step slide that he had around the different stages, we've absolutely gone through that. And whether you're big or small, I think it's just a natural way to shift from CSR to ESG. Next. So our journey, CSR has always been part of who we are. We've always said it's part of our DNA. But in 2020, we embedded sustainability into our overall philosophy. So we used to go from being very quiet about the CSR work we were doing. It was very grassroots, very independent by country, depending on which business unit was doing it, so which entity of Grupo Beanbo. And then in 2007, we started to get a little bit more serious about it and looking at the other aspects. And we created this, I guess, small strategy. We called it Sembrando Juntos, and there was 4 aspects to it. But again, it was all extremely independent, very ad hoc. Everyone was doing their own thing. If you want to skip 2 slides. So this is our sustainability strategy today. So we moved from those 4 quadrants to really 3 pillars that are focused on products, people, and planet. And these are the core elements that we're trying to do as an organization. But the key part here is that it's a global strategy. So we went from being very quiet, very grassroots, to now every single business unit under Grupo Beanbo are all working towards the exact same objectives. So when we say net zero carbon emissions, our goal is to be net zero by 2050. That means everybody under Grupo Beanbo in the world, so all 32 countries, will be net zero by 2050. Next slide. So I guess, the real question I'm sure everybody has whenever you attend these sessions is, okay, that's great info, but now what? How do I get there? And to me, you can't move from CSR to ESG without a culture change. So I'm going to give you a few tips. In year 1, these were kind of the steps that we went through. Next slide. But it's really 3 years. And in our practice and in the way we've evolved and in prior work that I've done, it's really 3 years to change a culture. So it's really important to understand where you are today, where you want to go. And as you work through each of the steps, to always listen and always take feedback and understand how everybody's feeling around you. Everybody has to come with you. So everyone, Aparna's the expert at TD in ESG, but there likely are other people in TD that have no idea what ESG means. So how do you make sure that you are implementing that to everybody in your organization? And it's all about the mindset change. Next. So I've put together a couple of tips for you. So how do you start? And this is for organizations big and small. So we're a large organization, but ultimately, we address this as a small organization. So the #1 tip that I can give you is make it easy. So look at what is everybody already working on in your organization. So most companies have business plans and objectives they're trying to achieve that may or may not have anything to do with sustainability. But if you look at those plans with a sustainability lens as the sustainability expert, you can probably tweak the existing plans to give it a bit of a sustainability feel. So what I mean by that is you don't want to add extras to everybody's day job because nobody's going to want to work with you. But how can you take a project they're already working on and either measure something differently or add one more KPI to it, or even just look at it a little bit in a different way and say, you know what, that's actually a sustainability initiative. And then, so start small. It doesn't have to be a massive change in year 1. If you start small and celebrate the wins, people will start to understand why you're doing it and get excited about it and want to do more. Next. Hit home. So, again, to me, sustainability is a behavior change and it starts at home. We can't expect people to be coming into your company and, for example, making sure that all the lights are off in a room if at home they're not doing that. Or if at home, they're turning the water on and running all over the house doing other things. How do we have people start to think about how do we reduce our water? So the way you can do that is by raising awareness, consistently messaging with your associates or employees, or we call our employees associates, and then talking to them about what difference does that make for them at home. So it's not just about the company. How does it hit their own personal pocketbooks if they're taking the behaviors that you're teaching them at work to home? And it really makes a huge difference. We've been doing this for several years and we have a lot of excitement created around it. Next slide. This should say tip 3, by the way, but it's tip number 2. This is one that's a huge thing for me, is this is not your project. So, I say this all the time at Beanbo Canada. This is not Teresa's pet project. We all own sustainability. So we will not be successful unless everybody is working together and unless everybody's working on the same things. So collaboration is key, whether or not you have a sustainability department or you don't. Every function in the organization needs to work towards whatever objectives you set. And it's really helpful to have a joint committee because often people are working on different initiatives that they could really kind of tie together and be successful together, but they're kind of overpowering each other because they're just not aware. So the more you can have people work together, the better. Driving engagement is key as well. So, engaging each of the different functions and helping them understand what's their specific role in the sustainability success. So for example, in our company, we sell product to customers. So let's say it's Walmart's our customer. It's really important for us, how do we work with our sales team to help them understand how does our sustainability objectives help them working with their customer, which is Walmart, who also has sustainability objectives. So it's really about finding that right fit. Next. Communicate like crazy. I've touched on this already, but it's really important to consistently communicate with your employees and put it at a level that they understand. So for example, Daniel started off with, what is ESG? That's a great start. A lot of people won't know that. And how do you continue to help people understand what it is that we're trying to achieve and what everything means? Acknowledge every effort. Celebrate all of the people that are working on the projects. Next. And this is my final tip, make it count. So make the plan achievable. Don't set targets that you're not going to achieve each year or that are so far out there, but it's a great thing to talk about. People will just give up. So if it's a target, I'll give you a really quick example. Our president of Grupo Beanbo announced several years ago that we are going to be 100% renewable electricity by 2025. And internally, when we heard that, it was about 5 years ago, many of us were like, that is not even possible. And no one even looked at it as an opportunity. We will be 100% renewable electricity by the end of this year. So it is possible, but it's about having people understand how they're going to get there and making sure that it is relevant and achievable. Another way to do it is if you have bonus plans, build it into your bonus plans. Make people accountable for actually achieving the plans and empower people to make change. So it's not just about behavior change, it's also about process change. But if people don't feel empowered to actually do that, they're not going to get there. And I think that was my final slide. I apologize for really just skimming the surface. These will just be in the presentation. This is just to give you a sense of when you are doing all of those tips, what can you actually achieve together? So I've put together a few achievements, but we can just skip to the end. Thanks, Victoria.
Thank you so much for that, Teresa. I really appreciate you providing some really concrete tips and a strategy, a roadmap to getting there. So thank you for that. This clearly is a topic that we could talk about for hours and hours and hours. There's so much here, from all of the regulations that are coming down to how it's implemented in reporting to how you can actually embed it into your culture. So I really want to thank all three of our presenters for coming out here today, and I apologize to the community for not having enough time for Q&A, but what we might do is see if we can do some Q&A with the presenters after, and see if we can get some information out to folks. But we will be circulating the presentation so you can watch it and also send it out to your colleagues as well, because like Teresa says, this is not a pet project of one individual. This is for everyone to take on board and provide those PowerPoint decks as well so people can dive into them. So again, thank you so much to everyone who joined us here today from the audience, and a very special thanks to Daniel, Aparna, and Teresa for sharing their sustainability journeys with ESG. Have a wonderful afternoon, everyone, and we'll see you at the next session.
Thank you for having us.
Okay, bye now.